It's about that time of day again. My name is Joseph. Tuesday evening, January 16th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bearish with a big old spike in channel pattern tonight. This tells me to look for selling opportunities up above the highs of that channel tomorrow morning. The S&P is also bearish and trying to retest the low from earlier this month. And I'm looking for trap setups tomorrow because this flat moving average I'm seeing into the close this evening. The Nasdaq also bearish, but a short-term trading range in the Nasdaq tells us to focus on traps for the most reliable selling opportunities on Wednesday. And of course, on Wednesday, gold is bearish going into tomorrow's session and trying to retest today's low. But a rising support trend line is telling me to think twice before I get too aggressive tomorrow. Waiting for a little bit more information on gold before we start selling short. And speaking of selling short, the euro is bearish and trying to retest today's low. But I'll tell you, a recent run higher on the euro tells me I got to wait for a little bit more information before I start committing to the sell side here on the euro, because this market smells like a reversal is waiting to happen. But we'll get a great newsletter in store for you guys and gals tonight. We got euro, gold, Nasdaq, right? The Emini, S&P, crude oil. Got a plan for Wednesday's session. We're back after what was a real short, long weekend, right? That kind of first break of the new year. We got a big opportunity setting up for Wednesday's session. Before I jump in, though, I do want to remind you, if you're on YouTube right now, make sure you subscribe to my YouTube channel. Make sure you get notified every time I post a new video. Drop me a comment if you got any feedback below that YouTube video. And if you really want to stay in tune with everything that is School of Trade, there's a link in the description of that YouTube video. Follow that link over here to sidewaysmarkets.com. That's my trading blog here at schooloftrade.com. And make sure you join our mailing list, right? I'll send you an email every time anything new goes live here at schooloftrade.com. While you're here, don't forget, I'm always posting exclusive content throughout the week on my many different social media channels, so make sure you guys check me out if you do that social thing. Right below that, right below the video tonight, there's a spot there to download all the charts, right? So very easy. All the charts from tonight's video. How easy is that? You can have them on your computer for tomorrow, right where it says click here to download today's charts. And then speaking of tomorrow, what are you waiting for? Grab that free pass. Come out and join me as a guest in the trade room. I got a free pass for you. It's in the upper right-hand corner of the blog here at Sideways Markets. Grab that free pass. I'll see you guys tomorrow in the trade room as a guest. And if you have any questions at all about getting into your free pass or anything, right, anything that is trading or School of Trade membership related, don't forget you can always hit me up on live support on the right-hand side of the website. We are looking great here for the week. Had a great day so far. Hope you guys are having a great day as well. Tomorrow's hump day, I think, right? Yeah, it feels like a Tuesday, but it's really a Wednesday tomorrow. Tomorrow's Wednesday, January the 17th. What do we have on the schedule? Got a lot of news on the schedule tomorrow. You can see here it's a pretty lengthy report for tomorrow, but really a lot of this stuff, well, let's go over it. First of all, tonight we're going to hear from China. We get the fixed asset investment, right? The big red star news number tonight at 7 p.m. Eastern time. Probably not going to be too big of a deal, right? But always want to be aware of that news from China if you trade in the overnight Asian session. Tomorrow, of course, we got the first kind of big news event of the session tomorrow, right? Nothing in Europe, as you can see overnight, at 9:15 Eastern time, right? So we got 9:15 Eastern time tomorrow, right? That'll be the first major news of the morning. Don't forget, we open up our trade room at 8 o'clock Eastern time, so we'll be trading that reaction together. Then, we don't normally pay much attention to news from our friends to the north, right? Not that we don't love you guys, but they don't normally move the markets very much. We got the BOC, the Bank of Canada announcement tomorrow. You might want to be watching. Again, we might see some reaction to it. Markets like crude oil, natural gas, right? These are the big energy markets, of course, Canada being a major exporter of energy. So watch for that tomorrow around 10 a.m. We also got that housing market index tomorrow. I'm not expecting too much out of that, right? 10 o'clock is usually a pretty active time of day. And then as we go into the afternoon session tomorrow, we got that beige book at 2 p.m. Even though this is not labeled as a red star news event, there will usually be a reaction to it, right? It doesn't usually slow down too badly before it, but be aware, right, that 2 o'clock into 2:30 on oil, right? And of course, setting the tone as we go into that 4 o'clock close on the E-minis, right? So look for that beige book tomorrow at 2 o'clock Eastern time. And then tomorrow night, we're going to hear from the GDP number, right, from China. That may slow things down a little bit earlier than normal tomorrow as traders kind of batten down the hatches, because that will be a market-moving event. We'll talk more about that in, of course, tomorrow night's newsletter as it relates to, right, Thursday's session. And you may have picked up on this. What are we missing tomorrow? Tomorrow's a Wednesday. What do we normally have on Wednesdays? Yeah, we normally have the petroleum status report, right? So we have the luxury this week, right? Because we had Monday off to celebrate Martin Luther King Jr. We have the luxury of moving that 10:30 Wednesday inventory report back to 11 o'clock on Thursday. So take advantage of it if you're a crude trader. If you're a crude trader like we are in our trade room, right? You know that when the holiday is on Monday, it pushes back till Thursday. And typically 10:30 on Wednesdays is kind of a cutoff that's a little bit too early for us. You know, it's not very easy to trade crude on Wednesdays just because the inventory report's at 10:30. When we move that inventory back to 11 o'clock on Thursday, it really makes our job a whole lot easier. We'll talk more about that tomorrow, but be aware, no inventory report, right, for tomorrow. So we'll talk more about how to trade inventories on Thursday's session in tomorrow night's newsletter. All right, let's jump right in. We got a lot to cover here tonight. I know I'm running a little bit late here to the video here. I think every piece of software that I was trading had to be updated today from just everything. So I've been kind of getting hit from all angles here this afternoon. So I'm doing my best to make sure that I get this done as quickly as possible. But I do appreciate your patience. I try to get these out every evening as early as I can, right, for obvious reasons. Now, heads up here on oil. We are watching rollover. This is pretty simple. Around the 18th of every month, we get rollover on oil. What's the date today? Today's the 16th, right? So we're getting right up in that area where, you know, around the 18th of the month, right, we're going to start watching that rollover. As I look at this right now, and again, the market's just opened up after 6 p.m. Eastern time. This has been reset recently, but as I look at my market analyzer here, you can see there's still quite a bit more volume on the 218 contract than that 318 contract. So it looks like tomorrow might be one of those kind of half volume sharing type of days that we get on oil. We don't get this on other markets, but on oil and nat gas, right, the energy complex, the CME group, because it's a monthly rollover, what will happen is a day or two before the market rolls over, you'll start seeing they'll pretty much be equal. And, you know, the rule of thumb is trade whatever contract month has the most amount of volume, right? So, of course, crude oil futures contract, the 218 contract, will expire, right, at the end of the month. We're not waiting for expiration, obviously. You know, we're day traders, so we have no plan of holding that contract that long. But we do want to be trading the contract with the most amount of volume, right? You want to focus on where that volume is. So the volume is up there at 1324, right, on the 218 contract. Okay, don't worry too much about this. We go over this stuff inside my beginner classes here at School of Trade, right? Because obviously this is an important part about trading futures. Really, it's the most complicated part, you know, contract rollover, right? It's not that complicated. Trade the month that has the most amount of volume. So right now, right, the most amount of volume is trading on the 218 contract. Once that volume is greater on the 318, we'll trade the 318. You really can't mess it up. Right? If for some reason you do trade the 218, right, when the 318's rolled over, it's okay because the contracts haven't expired yet. They don't expire at the end of the month, right? There's two different terms there, expiration and the other term is rollover. Rollover is when the volume is greater on the next front month contract. Expiration is where your broker calls you and says, where do you want that barrel of crude oil, son? Right? That's expiration, right? So we're not waiting for that, right? That'll be later on this month. Okay, bottom line is, long-winded introduction there. Crude oil's bearish, though, in case you can't notice that from the chart. Crude is bearish, big old spike in channel pattern, telling me the most sellers are already in this move, right? Whenever we see a spike in channel pattern, we know that most of the bears are already in this move already. And the only way to really get more sellers excited will be to get a higher price, right? Get a higher price. So my plan for tomorrow is look for selling opportunities up above the high of that channel using the battle zone waiting overhead, right? And around, of course, right, that 64 to 64.31 area. All right, so a couple things here on the chart right now. First of all, strong move down, right, makes a pullback and then a new lower low. Once we see that new lower low, I'm going to connect those two lows, paste it right at the top, shave off the wick, right? And that creates that spike in channel. Again, spike in channels tell me that the only way to really get something good is to usually get above the moving average, right? You'll notice every time the price goes above that moving average, getting smacked back down. So the reason why is because when this thing tanks like this, right, sellers are jumping in. And of course, they're going to sell it again, right, as it goes higher, right? So by the time we make this lower low now, right, by the time we get down here, everybody's already in short, okay? And until we reach that measured move objective, right, which we know is an objective on a trending environment, right, we're going to have to do something more than just lower lows to excite more sellers. We're going to have to get above some prior swings, right? For example, prior swing here, get above that moving average trap high, and you can see sellers smoke this sucker, right, going right back down again. Okay, so that's the attitude you want to be thinking when you have a spike in channel, right, or any spike involved. And how do you know you have a spike? How do you know? I mean, obviously it's pretty obvious. But how would you know? What's the biggest giveaway that tells you this is in this regular channel? A channel doesn't fit. Right? So when you draw the channel down like this, and then you draw it over here, does that look good? Right? Does that look like what happened here? Right? You have to be able to explain why we didn't finish off that rotation. Right? It's a term that I call channel rotation, and you'll be amazed at how effective this little simple, this little simple kind of checks and balances will make sure you have, I don't want to say the correct analysis because it's not I don't have the right to say what's correct and what's not. But I can tell you right now that the most amount of tests, the most amount of bounces, right, whatever fits the best is usually going to be under the most amount of eyeballs, right? And the most amount of eyeballs will usually work the best. Okay, so I'm not in a position to tell you what's right or what's wrong, but I can tell you right now that this channel right here, because we have rotation back and forth, it's obvious people are using it, right? So that's how I know, right? So I know when we go down, right, when we don't make that full new channel rotation, you can pretty much tell, right? It's not a channel. It's a spike in channel, right? And then it's all about finding a good fit for that. Okay, what else do we know here, right? Again, spike in channel tells me get above the top of that, right? Get above the moving average basically, and look for traps, right? Trap high, right? And look for more traps, right, as we go lower here. What else do we have here? Strong move down, pulls back, measured move, right? It's an easy objective there for the sellers. At the same time, you'll notice kind of slip this little guy in here underneath there. Got a bunch of these. For whatever reason, the January low is going to be on everyone's radar here. We had that big move up at the beginning of January, if you recall, and these are some of those kind of major milestones as we make our descent lower, right? So 63.06, 63 even, right? You'd assume that's going to be a big milestone here. So we have to assume, right, the bears are trying to get down to that measured move, right? The bulls are trying to get back up to retest the high. Who has control right now? The bears do. So let's play this game. What if price goes up? What if price goes down? Right? What if price goes sideways here? So what if price goes up? Right? Price goes up. Beautiful. I'd love to get a trap high up here. Right? Get above some of these highs. If we go higher, I'm looking for a two-legged pullback. Let's draw that again, Joe. Followed by a buyer failure. Buyer failure, of course, at the moving average, followed by a strong move down, a pullback. We can sell, right, going back down below, right? So first one is two-legged pullback using that trend line. Second one here would be the buyer failure at the moving average. We're going to see a couple of these here tonight, right? So stay tuned for more examples of this on real charts, right? And then, of course, strong move down, right? The strong move down, we'll have to sell that retracement, right, going back down to that low, right? That will be kind of the ideal scenario here if we get that move, right, going higher. Hey, maybe all we get is a jump up, one try, two try, moving average comes over, right, strength, pull back and back down. Maybe that's all we get, right? Failure and pullback, right? Maybe we don't get a test of that, right, of that trend line. Fine by me. We'll wait for that move to go higher. What if price goes sideways here? Now you're going to see a lot of this on the minis here tonight, right? Flat moving average. So we might end up going sideways here, right? If we end up going sideways, who has control? The bears do, right? It's a bear market going into that trading range. What that tells me is be careful selling short. We're going to see this on the S&P and the Nasdaq in a moment, so stay tuned for more on that one, right? We want to focus on up, Anytime we have a trading range, right? I talk about this religiously, right, on our nightly newsletter. Anytime we have a trading range, right, looking for that one try, two try, kind of looks like this, right? One try, two try, higher second try, right, and then go back down from there, right? So one try, two try, and then back down in, looking for a sell up above that range. If it does go sideways here, right, goes sideways and it tries to go lower, do not try to sell that breakout to the downside. Wait for it to come up, right, trap, and then we'll try to use that, right, for our sell back down tomorrow. Just to warn you, though, as that market goes lower, it's going to be really enticing. It's going to be really attractive. It's going to make you want to follow this thing lower and sell it lower. But the problem is you're selling low at that point. And selling low doesn't mean, right, doesn't mean long-term profits for a professional trader, right? Selling high is we want to get into a habit. And it's okay if we can't get into the position. It's okay, right? It happens all the time, okay? Just in case nobody's told you this yet, okay? As a new trader, professional traders, we constantly see tradable opportunities that slip right through our fingers because they don't fit into our plan. It's okay, right? If the only thing the market gives you is the ability to sell short when it's already going low, right? When it's already low, I don't want to sell low. I'll go find a different market, or I'll just wait for it to give me a chance to sell high, right? So be aware of that. No one expects us as traders or expects you as a trader, right, to be in this market at all times with every single thing, right, the market is doing. Nobody expects it, right? So if it does go lower and it doesn't pull back, that's fine. Just wait for the move back up and sell the high, right, after it rotates right back down again. Now that, of course, leads me now to what if price goes lower, right? What if we open up here and we see this what if it gets, right, the kibosh here, right, gets run lower, and we start running lower here down to that measured move. At this point, right, we're seeing a failure to go back to the high. Okay, that should be one clue that something has changed a little bit, right? The personality between today and tomorrow, right, yesterday and today has changed a little bit. That's fine. The most important thing, though, right now, though, is don't chase after it, right? Yeah, it's very difficult to chase and make money consistently over a long period of time, right? I realize that you can get lucky every once in a while chasing moves, but you don't want to make a habit of it, right? Because it will catch up to you. Focus on those traps, right? Focus on those traps, right? Look for those traps. Again, why do I say look for traps up here? Because, again, you don't want to sell low, right? You want to focus on the ability to get up above a prior swing. Hopefully the moving average will come down at that point, right, and help us out a little bit, and we can get a little bit trap high, right, to finish off that move. As you can imagine, I'd much rather sell up top with a big wide open space, right? Big wide open space for a big target, right? Then try to force, right, some trades down near the objective, right? So kind of keep that in mind. Where am I in regards to where we're trying to go? Okay? Now, how do we turn bullish? How do we turn bullish? We're going to see a couple more examples of these, right, as we go through this tonight. But how do we turn bullish here? Strength, pullback, and strength. I don't care what direction we trade. Neither should you. Okay, do not get married, as they say, right, to long or short. This isn't stocks, right? There's no difference between buying and selling in futures. It's one of the many reasons why, right, I think futures is the cat's pajamas. Now, with that said, how do we reverse here? You want to see about as much strength that we saw lower going higher. Then remember that could easily one try, two try, and fail back down, right? Remember that's not a guarantee going higher here. When I see a strong move up, moving average comes over, right? If we can hold that pullback, if we don't, we're going to sell back down, right? That's your failure, right? But if we can hold that pullback and go higher here, right? If we can hold this pullback and start making new higher highs, now we're talking, right? Now we're talking. Then what I'll do is I'll look for that new bull channel. Right, look for that new bull channel, find those levels of previous resistance, use them as support, right, and look at that retest of that high. All right, pretty easy plan there on crude. Watch the rollover, sell high, right, don't sell low. And again, don't forget, tomorrow morning, 8 o'clock Eastern time, I'm going to see you there with me, right? Let's do this. Let's keep going. S&P now. S&P is bearish. Right, just a little bit bearish, and trying to retest the low from earlier in January. Get that January 12th low down there. But this short-term trading range is likely going to make our job a lot more difficult. right? Anytime I see a short-term trading range, I always look left to know who has control so I can follow that direction. And then I start looking for trap setups above and below the range extremes. A couple things here you'll notice here. We got a leg down. I'm trying to use that leg, right, as a target. That puts us right back to that, right, 0112 low. This is a spike in channel, right, because you can see if I draw the channel across, you can see that doesn't make much sense, right? So you know this is a spike, pull back and go, right? That's a spike in channel pattern. In this case, it really doesn't matter very much, right? It doesn't matter very much at this point, right? We know anytime we have a market that makes a strong move down, we're expecting a two-legged pullback and then a retest of that low. Bears are trying to get back down to retest that low. Bulls are trying to shrug off these bears. Their initial target's up around that big round number, and their big target for tomorrow is back up to retest that high. So measured move, right? Channel. Next up, battle zone, right? You'll notice here we got all hung up here for a while going sideways. That moving average flattened out just fast enough, right, to give us a heads up going into the closing bell here this afternoon or this evening, right, that you do not want to be selling that breakdown. So here's my trading range now. Who has control? The bears do. What if price goes up? What if price goes down? What if price goes sideways? Well, we're already going sideways, right? So we got that covered. No problemo there. What if we get price going higher? Well, it's a range, so looking for two-try rule. One try, two try, and then back down in, right? Looking to sell above the top of that range. And again, it makes sense, right? You're in a range. The market's balanced. If the sellers wanted to, they would have already sold down here. They would have already been back to those lows. Something's wrong. What's wrong? Obviously, we're not high enough to attract enough sellers. We got to get higher, right? That's the reason why when a market is trading in a range, we don't try to sell a breakout because you're selling low at that point. I know it's logical to want to sell the breakout to the downside, right? Because sometimes it does work. But the problem with trading breakouts is that over a long period of time, you're going to end up dying a death of 1,000 little cuts, right? Little loss here, make the money back, little loss there. The problem is with breakouts is that you can add more indicators and add more filters and, right, try to figure out which breakouts will be successful. But by the time you really learn that breakouts are unreliable, right, you usually have gone broke in your account and you're usually off, right, getting back that 9-to-5 job that you quit a few months earlier. So I would highly caution you against getting too wrapped up, right, in trading breakouts. Instead, look for traps on liquid markets, right? These are not cryptos or penny stocks or any other gambling instruments, right? They're out there right now. These are liquid markets, so you don't want to be getting trapped, right, with breakouts like the poor suckers, right, who try to sell that breakout, right? So up, one try, two try, back down. What if it goes lower, though? You know, we don't trade breakouts. What if it goes lower? If it goes lower, I want to see a strong move down, right? Show me some strength. Get the moving average to clear below that low, and then I'm looking for a trap. Now, why a trap? Because at this point now, I'm too low. I don't want to sell down here. You know, with selling down there, where's the target? The target is that, right, is back to that low. You're right there, right? It's not going to get a lot of people excited, right? A lot of sellers aren't going to be going, whoa, boy, I better get in down here, right? I want to miss out on this 6-tick winner, right? It's not going to get a lot of sellers excited, right? But if I can kind of balance out that risk reward, right? Again, right? I want to sell up here because now here's my risk and here's my reward, right? That's something to get excited about, right? We can get excited about that. Hey, check it out. I can sell here. I can risk 2 points to make 4 points. Now we're talking, right? That's a good business decision, okay? But if we go lower, right, we scream lower here, trying to sell short now, it's backwards. Now my risk is here. It should be, right? Your stop should be way up here. If you put your stop too tight down here, you're just going to get stopped out and watch it go without you, right? Got to know where that stop protecting you is, and your risk is right here. That's not a good risk-reward ratio. What I'd much rather do is balance that thing out, right? Get the strong move down. I understand it's not easy to let it go without you, right? But understand the odds are not on your side in that. Get the moving average down, then trap. Little tiny little two-legged trap high, right, and back down. Now what I can do is I can use that for my risk, right, and I can build my reward back down to that low. right? Lot more reward than there is risk, right? I can't do that until I get that strong and then come back, right? That's when I can get a good risk reward ratio on it, and that's when I can start gaining some traction, right, long term in my account. Remember, there's no way of telling what each individual trade will do. You know, day trading is a game of pattern recognition, and it uses the law of large numbers. So you could try to breakout pattern to make money right now, but you do that same breakout pattern 100 times, right? And you'll end up losing more, right? When you factor in commissions and slippage, right? Than you will make. Okay, how do we turn bullish? How do we turn bullish? Well, in all reality, I want to get through this battle zone, right? And as I mentioned before, right? Strength, pullback, strength. In my mind, right? In my mind, I'd really like to get to this area, right, to really nail this thing down as a bull market. Let's just say we go up, we jump up, right, we hold, right, strong move up, pull back, hold, strong move up, right, strength, pull back, strength, right. Then what we'll do is we'll grab these highs here, project off that low, grab one of those hidden channels, and then look for that pull back down. What is amazing about reversals is that you can try to grab this move going higher here, which is extremely aggressive, very unreliable, because you're buying high, right? You're buying as the price is rising. I know it's intuitive to do that, but again, that's why day trading is so difficult, right? When we trade like humans, we don't make very much money. We have to trade like traders. We don't want to buy high. It's just natural to want to buy a market when it's running higher, right? Or running lower, right? So rather than buying as the market goes higher, give it a few moments, because usually what will happen is it'll usually end up pulling back and give you a chance to get involved pretty much right where you would have gotten in the first place. It's amazing. It's almost spooky how it works, right? So rather than chasing the move going higher, right, mark up these two highs, stay patient for it, find that hidden channel, right, and buy off that hidden channel. You'll probably get in right about the same price, right, that you would have if you would have chased the market going higher. Right, and then you're in a much better position at a much more reliable opportunity when the bulls clearly, right, are in a pullback mode. All right, guys, got a good plan there on the S&P, and boy, I'm taking up way too much of your time here tonight. Let's keep going. Over to the Nasdaq here. Nasdaq is bearish and trading sideways in a short-term trading range. This tells me to look for traps up above the highs or down below the lows tomorrow morning, right? One thing to keep an eye on tomorrow is that low down that January 12th low. If we can retest today's low, right, down there at 29s, we probably will see the market push down to that major swing level from earlier on in the month of January. As I mentioned earlier, right, we kind of had that big, not sure if you guys are paying attention at the beginning of the year here or not, but we had quite the doozy, right, quite the doozy there of the move, right, at the beginning of this year, right, and so we're starting to get some of these, right, big pullback areas, these milestone areas, right, starting to show up on our chart right now, right? You'll notice another one down here as well, right? So big targets waiting here for the sellers, right, back to run some stops at some of these big major milestones. Now that only helps us so much. Right now, all we really know is we have a bear market that is obvious, right? This is not a bull market, okay? At least not for day traders or medium-term traders. Obviously, if you look at this in a daily chart, it's clearly a bull market still, right? But I am not a swing trader, right? I'm a day trader, so I'm looking at day to day, and right now we're coming out of a very strong bear market. We'll see if this crypto plunge we're seeing today, we're seeing some of these crypto markets really take a beating here today. We'll see if that drags us down tomorrow. But here we are, bear market, right? Going sideways, right? Flat moving average. That tells me double tops, double bottoms. Oh yeah, this is definitely a trading range. With that trading range, what are we looking for, guys? You got it, right? One try, two try above, right? Back down in, right? Selling up above the top of that range, right? What if price goes lower? Yeah, don't sell at that low because that's the objective, right? What you want to do is, a couple scenarios keep in mind. As the price goes lower, if we retest that low, okay, if we retest the low, mission accomplished, then the only place you want to be selling at that point will be back up at the high. Okay, so step number one, because we're so close to that low, if we retest that low, then I'm looking for this to be a trading range, and of course we'll sell off the high. If we run lower but we don't retest the low, there's still work to be done. Traps, 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 right? Selling again, moving average below. And again, remember, this really isn't that attractive down here. I just want to put that out there, right? This really isn't the best tradable opportunity in the world because look, there's just not much meat left in the bone. Okay, so whenever we have a situation where, yeah, we're following the trend, yeah, we're selling that resistance, but where's the target on this thing? I know. It's easy to say, yeah, the target's way down here. But don't be naive. You have to know where, right? Where is the actual objective? We have a two-legged pullback right now, trying to at least, right? The objective is back down to retest that low. Justifying trading low because you think the market will go through the first objective down to the next objective is pretty dangerous thinking, right? You are either giving your trade a little bit too much credit, okay, when we really can't rely that heavily on going through a level, right? And you got to remember, we don't know what the market will look like once it gets back down to that low. So make sure you plan for that, right? Again, if the market goes lower here, I got to be really careful here because there's not a lot of meat left in the bone down here. There just isn't, right? There isn't a lot of profit until we can really widen this sucker out. Okay, so we know if price goes sideways, it's already going sideways. We know if it goes up, we know if it goes down, right? What if price, right? What if we go lower here and we hit the low and we don't bounce, right? Then what? Well, then we have to assume we're looking for what we call price acceptance. Get that moving average down, right? And we'll try to use that level of resistance, or what was the level of support, as resistance. So it's very similar to how we trade a range. Again, it's all about knowing where the objective is, right? The objective is to retest that low right now. Once we get to that low, do we go through it, right, with what we call price acceptance, which you can find a lot of tutorials on my blog about that. Go to the blog at Sideways Markets, use that search box and type the word acceptance or rejection in there, and you can find some of the previous lessons I've done on that topic, right, and go forward from there. How do we turn bullish? How do we turn bullish tomorrow? Strength, yep, pullback, and strength. I would imagine if those buyers can take control, right, they'll find their way up around this 68.10, right, 6,800 is a big round number there. And so let's say we go up, right, we run up, right, make a big run higher here. What's the plan then? You got it. Let's grab those highs, right, because that's really the only information we have at that point. Let's put it down to that low, right, and then we'll look to buy off of that low. And again, as I mentioned earlier, rather than trying to chase the move higher here, right, just wait for it. It'll usually pull right back to right about that same spot, right? And that's where you can get in for a much better buying opportunity, right? Obviously, we get targets for the buyers up around that high of day. Targets for the sellers are down right at that low. Patience, right, is the name of the game right now here on the Nasdaq. Would love to get this price up so we can sell it back down. If it rolls lower here tomorrow, right, rolls lower, I'll watch for a possible spike in channel, right? Watch for that tomorrow, right? Relatively strong spike down, maybe a spike in channel tomorrow, right? So we're going to keep an eye on that. We'll see how that develops tomorrow as we go into the U.S. morning session. All right, let's keep going here. How about some gold? Now, gold at first glance, right, is bearish, but as you can see here right now, since I started recording this video right now, this does not look good here for those bears, does it? No, it doesn't. Gold, again, as I mentioned when I first started this recording, gold was bearish and trying to retest today's low. But with this recent bullish run higher, right, all I really was looking for was buyer failure at that moving at that moving average. So now that we have this run higher, right, let's kind of flip the script on us here, and let's go looking for a retest of that high, right? You'll notice here we saw a strong move up. What I was prepared to say tonight was that we're looking for that pullback, right, and that failure back down. I was going to say to make sure that, right, you watch that rising support trend line because that will definitely be an obstacle to get through, right? So don't chase after that move too far. But now we're seeing strength, pullback, and strength, right? So now what's the plan here? Do I chase after this move going higher? Hell no. I'm not going to buy high. I want to buy low. What do? Once we see the market pull back, and we don't have that pullback yet, but once we see it start to pull back a little bit off this high, let's just say it pulls back here for now, right? Let's grab that off the highs. Let's bring it in off the low, right? Now it looks kind of parallel for you, right, for that. And then again, usually it'll end up somewhere back around this area, right? So look for that buy, right? Using that kind of like that hidden channel, right? That hidden channel. So again, I'm not going to choose to chase after it right now, right? Sellers are likely, right, bailing on this thing. Fine by me. I don't really care what direction we trade in, and neither should you. All I care right now is who has control. The buyers have control, okay, after they hold this pullback. Buyers having control. It's a trend reversal. Anytime we have a trend reversal, usually the most effective thing is a hidden channel, usually, right? Obviously, I can't draw a channel like this. This doesn't make much sense, right? That's not my channel. There's no good, right? No good rotation there. And this channel is probably going to be a little bit too steep, right? So we'll try to find that again. Once we pull back a little bit, we'll know more about that. What I'll do is I'll shave off these wicks, right? Get that channel up, and then again, usually be right back where that first pullback area is, right? We'll use that for our buys here, right, for tomorrow. Okay, so the hard part right now is just staying patient. Just staying patient and waiting for that pullback. I know it's really difficult, but if you want to be a successful trader, you're going to have to stay disciplined, right, to wait for your go-to patterns, right? So make sure you know what they are. That way you'll make it easier, right, to stay patient for it. All right, so we got a good plan there on the gold, right? We know price is bullish. We know we're going to be looking for, right, that hidden channel, right, coming down. What if price goes sideways here? If price goes sideways, right, not much changes. It becomes a spike in range, still bullish. I'm going to still do pretty much the same thing, right? I'll still go in, put that trend line up, right? Put that trend line up, right? We'll still look for that 1 try, 2 try. In this case, we'd like to incorporate, right, that channel, right? Incorporate that channel along with, right, along with the that trading range, right? So not selling a breakout, right? Buying a trap below that trading range. Okay, we know if price goes higher, we're already going higher right now. We know if price pulls back, we know if price goes sideways. Perfect. How do we turn back to bearish again? How do we turn back to bearish again? We're going to see this on the euro, I think. We'll see what the chart looks like when we get there. But basically, we need to see the exact thing again, right, for the sellers, right? Got to go back down, get below that moving average, right? Hold that pullback and show me, right? Show me these sellers mean business. Because as of right now, even though it kind of feels like we're being tossed around right now, we are, right? We're definitely being tossed around. There's no if, and, ors, or buts. I'm not going to sugarcoat it, right? This is a pretty sloppy market. And when times get sloppy, sometimes the market goes bearish and then bullish and bearish, right? And it goes back and forth like this, right? Until the market kind of figures out where it wants to go. So in the meantime, if it wants to chop around back and forth here, I plan on allowing it to do whatever it has to do to get it out of its system. And then I'll look for my setups, right? You got to know what your setups are, right? Know those for tomorrow and wait for them. So how do we turn back to bearish? As crazy as it sounds, right? Strength, pullback, and strength. The only problem we see here, obviously, is this rising support trend line. It's not going to be easy, so we want to get through it. Strength, pullback, strength, and we can use that sell. Again, don't take the bait, right? Don't try selling, right? Don't try selling at that support. Don't sell low, sell high at that level of resistance, right, for that move back down. And then obviously, if we do head collapsing back down here, right, this will end up being a larger measured move, so be aware of that, right? It'll be a little bit higher, right, bear target for that measured move. Over here now to the euro, wrapping things up here on the euro. Now the euro looks, I'll tell you, the euro looks really good right now. I was expecting, after seeing this gold right now, I was expecting to see that euro a whole lot more perky here right now. What is the euro doing? Well, I want to say we're bearish right now in the euro. Right, this is the first time we pulled back to that moving average after this big short covering rally that happened at 9 o'clock Eastern time. So I'm going to say we're bearish right now and trying to retest today's low. But clearly the strength of this recent move, right, gives me reason to stay patient for some strength going lower here, because this may be able to hold this pullback, right, and go higher, right? So here's the plan here. kind of put all this stuff together here right now, right? Got our channel. Now this channel could be drawn in a few different ways. I like to draw off today's information, right? So of course we got good rotation back and forth, right? That looks like that's the channel. Anytime we have a good, well-qualified, right, or well-behaved channel as this one, we usually get that nice two-legged pullback, right, and then a failure back down to retest the low. One thing is for certain, though, we are coming uncomfortably close, right, to that high of day. And once we hit that high of day, there's just no way you can call this a bear market any longer, right? If we go back to retest today's high, I don't care what the pattern looks like, what the candles look like. How are we going to call it a bear market if we're now making a new high on the day, right? So that's the bottom line. We're right there, right, about losing our grip, right, for those sellers. Now, again, at this point now, there's a big, big bullseye waiting for those bears down at that low, right? So think about now, risk is here, right? Reward is here. That's a really juicy risk-reward ratio. The problem is this strength right here. Okay, what do we always talk about whenever a market moves in one direction on strength? What usually happens? Pull back to the moving average and a retest of that high. Okay, again, not a measured move. All we know is what we know, right? We know where the high is. We know the odds are very good they're going to retest that high. Remember, being a trader, it's all about understanding where's the best probability, right? What has the highest odds of success? That's all that really matters. You know, it would be like going into your garage, seeing two cars, right? Knowing that one car has a 50% chance of getting you to work on time this morning, and the other car has an 80% chance of getting to work on time. Okay, which are you going to choose? I hope you'll choose the car that has the highest percentage chance of getting you to work on time, right? That's the same thing. We have the choice. We just have to understand the numbers, and we have to make the right decision, right? Not based on the shiny paint color, right, of the unreliable car in the driveway, right? You got a Ferrari in the driveway, but it only starts half the time, right? And you got a little Pinto, right? Little Subaru pickup truck, right? Right? And that one always starts. I would recommend take the one you can rely on, right? Even though it may not look as nice and might not be as shiny and fancy, right? You get the point. Okay, so we got to think of probabilities. Now, with that, get this rising support trend line. This rising support trend line now is starting to show us, right, a sign of a two-legged pullback, right? So we're not out of the woods yet here, buyers, right? They get a real strong move higher here. At this point now, we're back below the trend line. We've used the trend line now as resistance. Now all we need to see is a strong move down, right? That'll be the most aggressive opportunity here to be a seller. The next thing, which is what I'm waiting for, right, is going to be that failure followed by, right, strength, and then look to sell that retracement going back down, right? That's going to be a lot more reliable, right, here and here, right, selling it after, right, we get that drop. And it will usually be something like this. Again, right, the aggressive one now will be to sell here, right? It'll be the one off the high. It's a failure pattern, right? It's a failure pattern. It's a pretty easy pattern. We talk about this stuff quite a bit on this nightly newsletter. The problem, though, is the reason why I would recommend against it is because of the strength of this move higher. It's just really strong, right? It's a real strong move, and oftentimes it's going to be more difficult than not, right, to get this thing to fail. So I'm going to wait for it to fail, wait for that strength. Now, once I get that strength, right, take out this little guy here, draw off that low, paste the top there, right, and there now, usually we'll bring over the moving average, right, and there, my friends, right, becomes a great way to sell the sucker back down, right? It won't have as much profit, okay, but a lot more reliable, and that's all that matters, right? Yeah, I can make more money selling up here, but it's not as reliable right now. Why is it not as reliable? Because of the strength going higher. Okay, so you got to put this in context before you go taking the pattern. All right, guys? So that's the plan there for the euro. Now, if we hold and go higher here, right, if we hold and go higher here, then we know we're definitely bullish. Grab that, right? Grab that. You know what I'm going to do here, right? Find that hidden channel, try to get back in this area here, right? And then up from there we go. All right, guys? Had some great lessons here, right? Some great lessons. Always about reading the market's context. The market's context will tell you what your probabilities are, right? Once you know your probabilities, then you can make an educated business decision. Speaking of business decisions, one of the best business decisions you'll ever make in your trading career won't cost you a dime. It'll take a few minutes of your time, though, and that is joining our free trial here at schooloftrade.com. If you're on the YouTube channel right now, make sure you subscribe to the YouTube channel, right? Hit that little bell icon to always get notified of new videos, and then dig into the description of that YouTube video. There's a link in there that'll send you over here to my free trial. I'll teach you guys all about the strategy we use here at School of Trade. I'll shoot you a free pass. Come out and join as a guest here this week, right? What do you have to lose, right? Grab that free trial, right, on the website. While you're here, right, learn more about beginner, intermediate, and advanced classes we have here at School of Trade. And then don't forget, I'm always here to help. They don't let me out of my cage until Friday afternoon, so I'm going to be here to answer your questions. I'm only half joking about that. The bottom line, though, is I will be here to answer your questions. Hit me up on live support if you have any questions along the way. Boy, look at that time. We are out of time here tonight. Thank you so much for sticking around late with me tonight, guys. I appreciate it. I will see you guys tomorrow morning, 8 o'clock Eastern time, right? Tomorrow evening, we'll do the newsletter once again. If I don't see you guys tomorrow morning, same place, right? Same time tomorrow, kids. You guys be well out there. Be nice to each other, will you? And be here next time. Adios, amigos.